let's bring in, without a doubt, one of my favorite guests. Let's be honest, the great Jay Woods of Freedom Capital Markets. I don't even want to talk about stocks because not only is it our 100th broadcast, it is the great Jay Woods' birthday. Happy birthday, bud.
Yeah, happy birthday, happy 100th to you. It's a privilege to be the 100th guest, although really not, because I've been on the show quite a few times.
Yeah, you have.
Congrats to you and the whole team behind the scenes. They do a great job.
So we did have all-time highs yesterday. A little bit of profit taking here, so we don't have another all-time highs for your birthday. But when you look up,
yeah,
what do you see
I wanted that. I wanted down
this
50,000 for the birthday. We didn't get that, but what do we see? We see a little bit of a pullback, a healthy pullback. People expected us to get a little bit of a rally on that CPI number, coming in slightly cooler than anticipated. Look, I'm learning from JD and bringing my notes with me.
Man.
I won't read them though. I memorized mine. But no, what we saw was a little bit of a pullback, a lot of drama, a lot of headline risk. What we're watching for now, one, we do have real data. Okay, we got the CPI, it was slightly cooler. That was a good thing. But what didn't happen? The odds of a rate cut. The odds of the rate cut remained 5% for this January meeting, and then the further months did not increase either. So no one thinks that this number is going to get the Fed to cut rates anytime soon. There's a little more drama going on with the Fed that we would like to see end, and I think that will come to an end very soon, and nothing will happen, and Jerome Powell will be fine. But when you hear the news that the Fed chair may now be replaced for cause, the markets don't want to hear that. They don't really care for it. Will it have an impact over the long term? No. But what we are watching now is earnings. We got them with JP Morgan and Delta today. Not as good as we were hoping. A little bit of a slight miss on one or the other side, revenue and earnings, depending on which one you're looking at. And now we focus on the financials the rest of the week. We've got Goldman, we've got Morgan, we've got Citibank, we've got Wells Fargo, and then we have a great transport in JB Hunt, which trades right over here. And then we've got regional banks on Friday. So we've got a lot of earnings to digest, and I think that's what the market's going to want to see. Is that growth continuing? And I believe it will.
Jay, what are some of your biggest questions for the big banks? Is it net interest income for the quarter? Is it the health of the underlying consumer? What are you going to be tracking as we get Wells and Citigroup, et cetera?
For me, it's trading. And trading revenue is up through the roof across JP Morgan, and that's what Goldman and Morgan had seen the last quarters before. But net interest income, always something that people are monitoring with rates. But rates have been relatively stable, so that's not going to be too much of a shocker. JP Morgan got hit on the Apple Card. I didn't really dig too deep into that, but I expect Goldman, I expect Morgan to do extremely well. What I want to hear is less pessimism. Jamie Dimon, very much the conservative traders talking about some of the headwinds, which are understandable, but the market doesn't want to hear that. They crush it on earnings consistently over time. The stock will bounce back, but when you give all these dire warnings, it kind of scares the market a little bit, and we saw that today.
How much or how little should the average retail investor pay attention to the kind of palace intrigue over the Fed? I thought that was a remarkable statement Sunday night out of Jerome Powell, maybe trying to get ahead of some negative headlines into the print yesterday morning. But man, oh man, we got the Lisa Cook case. I mean, the drama surrounding monetary policy, I've never seen it higher.
We could do a whole show on this because I am a student of Mr. Powell. The fact that he came out with his own video, he was prepared for this. He's been proactive to fight it. And then the other Fed chairman, the three Fed chairmen alive, Bernanke, Yellen, and Mr. Greenspan, still alive, they all came out with statements, backing him, and now the ECB leaders came out with statements. So this, to me, is about the independence of the Fed, and I think the administration is slowly pulling back from this narrative, and it will be a nothing burger of a story, but the initial reaction was to sell off a little bit yesterday, and then we followed through today.
I'm about out of time, but I'd love to plug your newsletter. One of my favorite things in your newsletter this week, the photo of the late great Art Cashin rocking the Dow 10,000 hat in March of 1999. What a gem you included.
March of 1999. I was right here. They were throwing hats off the balcony. They did it the week before, and as the market closed, the Dow ticked below 10,000. They wanted the hats back. I grabbed my hat then. I still have it. I will break it out when we hit 50,000, and hopefully don a 50,000 hat as well. But yes, the great Mr. Cashin, that Dow 10,000 hat. A lot of history here, and we hope to make some more history very soon.
You're not kidding. All the more so to celebrate a great birthday for a great man, Jay Woods. Good personal friend of mine, good personal friend of the show. You're welcome back anytime. Happy birthday, buddy.
Thank you, and happy 100.